Let's see if our next guest has a crystal ball. He says there's no expiration date on this bull market and it's safe to buy again. Let's bring in John Stoltzfus, the chief investment strategist at Oppenheimer. John, welcome back.
Hi, Melissa. How are you?
Why are we destined to go higher at this point?
Well, we're not destined to go higher, and I didn't say it's safe to come back in. I said right now it looks like everybody's gotten over all the stuff that freaked them out in the fourth quarter, which was essentially the price of oil, the Fed, the expectations that a deal would fall apart with China, that we were going into a recession. Those things seem to be off the table. But what we do say right now where we're standing, we think a lot of the settlement of the Chinese deal has been discounted into the market. That's been priced in. But we may be surprised to find that the large caps, particularly the multinationals, which have been lagging the smalls and the mids, they may have some more room to move coming up when we get a deal. We think the administration will get a deal. It'll be parallel to NAFTA. Everybody will say it's not a heck of a lot of different what we had before, but it'll be progress in the right direction. The old progress, not perfection kind of thing.
So you say that a lot of the deal has been priced into the markets, but yet you say that that there is underperformance in the large caps that could spring to life once a deal.
Yes.
You're saying that large caps have underperformed far this year in this rally? And what pockets of large caps are we talking about?
They have underperformed, particularly the leadership has changed in large caps, for example, industrials, which is one of our favorite sectors for last 2 years, is the #1 sector. Energy has suddenly, come up in leadership from the bottom. You've got information technology, which everybody had given up on, third best performer year to date. Then you have real estate. All of a sudden, that's coming back. So the environment doesn't look particularly frothy. If anything, it looks like rotation and rebalancing are alive. But the area that is underperforming, when you consider consumer discretionary and areas of the media, some items in here within consumer staples, materials, there might be a lift there. With materials, we'd expect once you get a deal with China, it could look for materials like it did in the first quarter of 2003, when everybody realized that, hey, China had an order book and they were buying chemicals and all kinds of materials to get going again. Because we think we're going to get, with a deal with China, we get a re-rating of the global economy. Right now you have a negative overhang expectations that the protracted trade war not only hurting outside the U.S., but it'll hurt the U.S. too.
So I'm curious, the things that we are worried about, Fed, oil, trade deal, of those going forward in the long run, what should investors look for? Should we ignore any trade deals or any trade skirmishes? Is the Fed most important? Is it oil? What do you look at?
I think, for one thing, just the obvious problem is always the Fed in that we've got a new Fed chair a year later, okay? So he's been in for 12 months, but the obvious thing is he's not the communicator that Janet Yellen and that Ben Bernanke were. They were masterful in that area. So there's room for a mistaken appreciation of what that Fed chair is saying. You've got Janet Yellen says he's doing a pretty good job. So you've had that event when both Yellen and Bernanke were on TV with him, and they were sort of I wouldn't say they endorsed him, but they were telling the market this guy's okay. But the market never trusts the Fed. They never trusted Bernanke. They never trusted Yellen. But to a much greater degree, they did at least have a calmer approach than they have had with Powell. You'd think it was Greenspan again, the way they treated Powell in that fourth quarter. The next thing would be related to the China deal. China has, for the president of China, it's all about 2025. And a protracted trade war is going to hurt Made in China 2025. He needs his best customer playing in here. And for Donald Trump, it is 2020. So the likelihood of this deal falling apart, I think it's a relatively small chance. Always exists. We could always get hit by a cab when we cross the street here.
Wow.
But the chances are we're going to make it home. Knocking on glass, right?
Knocking on wood. I thought about that.
Yeah. All right. John, thanks for coming by.
Thanks
Get
for
home safely. John Stoltzfus of Oppenheimer.
Guy, how you feeling about hitting the streets tonight?
I
feel fine because there's like a walking
pedestrian
way here in New York City where we've become very European over the last 5 or 6 years. So the chances of me being hit by a cab on my way home are probably slim. That being said, I'm not nearly as optimistic in terms of a deal getting done. I understand that it's been hard for the Chinese, but their markets come back in a significant way now over the last 6 weeks or so. And I don't understand why they would be in a rush to do a deal with us when there's so much uncertainty here in this administration. I think we're just going to get strung along for the foreseeable
Because they
future.
haven't given anything up. I mean, the way I look at this deal, this is not a deal
They're just buying more stuff at this point.
Let's buy some more farm equipment to solve the problem for intellectual property. This doesn't change made in China 2025. And so I think China, first of all, if you look at January, you had record credit expansion. The rest of the world may not want to hear that, but that's good news for commodities. John pointed out the parts of the market that I think can continue to run, those that have run. Look at energy prices. Fundamentals in energy are better, not because oil's at $60, but because companies are running at higher free cash flow rates, and I think they're actually giving themselves an ability to make money again.